This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Bitcoin is a decentralized digital cash that eliminates the need for intermediaries like banks and governments, using instead a peer-to-peer computer network to confirm purchases directly between users. Fiat money like the US dollars in your bank account is backed and regulated by the government that issues it. Bitcoin, on the other hand, is powered through a combination of peer-to-peer technology, a network of individuals much like the volunteer editors that create Wikipedia, and software-driven cryptography, the science of passing secret information that can only be read by the sender and receiver. This creates a currency backed by code rather than items of physical value like gold or silver, or by trust in central authorities like the US dollar or Japanese yen. If you're interested to know more about Bitcoin and how it works, I suggest you stay with me until the end of this video. Hello and welcome to our YouTube channel. In today's video, we will be explaining about Bitcoin and how it works. If you're new here, make sure to smash the like button, subscribe to our channel, and hit the notifications bell to get updates whenever we post. Bitcoin is known as a type of cryptocurrency because it uses cryptography to keep it secure. There are no physical bitcoins, only balances kept on a public ledger that everyone has transparent access to, although each record is encrypted. All Bitcoin transactions are verified by a massive amount of computing power via a process known as mining. Bitcoin is not issued or backed by any banks or governments, nor is an individual Bitcoin valuable as a commodity. Despite it not being legal tender in most parts of the world, Bitcoin is very popular and has triggered the launch of hundreds of other cryptocurrencies, collectively referred to as altcoins. Bitcoin is commonly abbreviated as BTC when traded. Bitcoin was launched in 2009 and is regarded as the first cryptocurrency. The concept of blockchain technology had been discussed in academic papers for decades, but a paper titled Bitcoin, a peer-to-peer electronic cash system, helped launch cryptocurrency into reality. What is needed in an electronic payment system based on cryptographic proof instead of trust, allowing any two willing parties to transact directly with each other without the need for a trusted third party, wrote Satoshi Nakamoto, the pseudonym of the mysterious author of the Bitcoin paper, in a white paper introducing the open-source technology. It's come a long way since then, now accepted as payment by companies such as PayPal, Microsoft, and Whole Foods. The price of one Bitcoin has grown substantially. In April 2011, the price was $1. By April 2021, it reached a record spot price approaching $65,000 before sliding back down. As of late September, Bitcoin was trading in a range between $40,000 and $45,000. Bitcoin versus other major cryptocurrencies. Cryptocurrencies are virtual currencies which operate independently of banks and governments but can still be exchanged or speculated on just like any physical currency. Launched in 2009, Bitcoin was the first decentralized cryptocurrency. Since then, thousands more cryptocurrencies known as altcoins have launched. While Bitcoin remains the market leader, cryptocurrencies including Bitcoin Cash, Bitcoin Gold, Ether, Litecoin, Ripple, EOS, Stellar or XLM, and Neo could challenge in the future because of rising demand, expanded applications, and technological advances. Why do differences between cryptocurrencies matter to traders? The differences between cryptocurrencies matter to traders because they give vital clues as to how supply and demand for each coin may change over time, in turn influencing market prices and how cryptocurrencies are traded. Circulating supply and upper limits. The supply of coins plays an important role in setting market prices. All other things being equal, the scarcer the coin, the more valuable it should be. Bitcoin and Bitcoin Cash each have an upper limit of 21 million coins, while Litecoin and Ripple have expanded maximum supplies of 84 million and 100 billion respectively. These coins will be deflationary once all the coins have been mined or released, while coins like Ether with no fixed limit have the potential to be inflationary depending on how much is burnt or lost. Cryptocurrency mining and release rates. The supply of coins changes over time as new coins are mined or released. Mining is the process by which blocks of transactions are verified and new coins are released. Bitcoin is currently mined at a rate of 12.5 new coins for every verified block, with a reward halving roughly every 4 years. The final Bitcoins will be mined around the year 2140. Ripple coins, on the other hand, were pre-mined by its founders and are currently being released at a rate of 1 billion per month. Reputation. Despite having fewer applications than many of its newer competitors, Bitcoin's value has soared over the last few years, and it remains the biggest cryptocurrency by market capitalization. This suggests that reputation remains an important factor in cryptocurrency valuations. Press coverage is likely to be an important factor here, with negative press, for example, following a major wallet hack, tending to have a negative impact on prices. Decentralized applications. While Bitcoin, Bitcoin Cash, and Litecoin are standalone cryptocurrencies, Ether and Ripple exist as part of wider networks with expanded applications. If the popularity of these networks increases or they're adopted by mainstream businesses, demand for their underlying cryptocurrencies could surge. Transaction speed and scalability. As adoption of cryptocurrencies accelerates, transaction speeds and their ability to handle a high volume of transactions is likely to come under increased scrutiny. Scalability could also be influenced by blockchain size and security, as these factors will affect the profitability of mining, speed of the associated network, and willingness of users to buy and use coins. Traders should therefore pay attention to software updates and forks to see how scaling technology evolves. How does Bitcoin work? Each Bitcoin trading symbol BTC through XBT is also used is a computer file stored in a digital wallet in a computer or smartphone. To understand how the cryptocurrency works, it helps to understand these terms in a little context. Blockchain. Bitcoin is powered by an open source code known as blockchain, which creates a shared public ledger. Each transaction is a block that's chained to the code, creating a permanent record of each transaction. Blockchain technology is at the heart of more than 10,000 cryptocurrencies that have followed in Bitcoin's wake. Private and public keys. A Bitcoin wallet contains a public key and a private key, which work together to allow the owner to initiate and digitally sign transactions, providing proof of authorization. Bitcoin miners. Miners or members of the peer-to-peer platform, and then independently confirm the transaction using high-speed computers, typically within 10 to 20 minutes. Miners are paid in Bitcoin for their efforts. How does Bitcoin make money? Bitcoin value follows the law of supply and demand, and because demand waxes and wanes, there's a lot of volatility in the cryptocurrency's price. Besides mining Bitcoin, which requires technical expertise and an investment in high-performance computers, most people purchase Bitcoins as a form of currency speculations, betting that the US dollar value of one Bitcoin will be higher in the future than it is today. But that's difficult to predict. Is Bitcoin worth investing in? The extreme volatility in Bitcoin prices makes many investors wary of investing in the cryptocurrency, yet others view it as owning a venture capital-backed asset, since the digital coins have received more acceptance as an alternative asset. Bitcoin remains the world's largest digital currency by market capitalization and reached an all-time high of $63,558 in April. The second largest digital asset by market cap is Ethereum. When Bitcoin fell below $50,000 on April 23rd, it also dragged down prices for Ethereum and other digital coins, resulting in a $200 billion loss in value of the cryptocurrency market in one day. The lack of regulation and continued volatility makes investing in virtual assets risky, which is why the majority of institutional investors, such as hedge funds, pension funds, and retirement companies, are reluctant to put money into them. While it's clear there are many reasons to be skeptical of digital currencies, many traditional investors have been won over to the new asset class. The blockchain space is frequently described as a transformative industry with the potential to disrupt the world in the same way that the internet did in the 1990s. Should you invest in Bitcoin? Let us know your thoughts in the comment section down below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.